This is so asymmetric that a modest amount of money could turn your life around with a couple of the right stocks. Don't feel you have to risk it because you don't want to be blown out. The only worst thing than missing in something like this is to have too much and sell right on the cusp of the big win.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're honored to have this returning guest. David Smith is a writer and contributor and field investigator at themorganreport.com. He joins us again this Friday, July 22nd, 2022. David, thanks for coming back on Liberty and Finance.
You bet. Thank you so much, Diane.
I was very intrigued on a conversation you and I had earlier in the week about how you were following Andy Schekman's report that we did with him in our weekly market updates about a historic shift in the commitment of traders and the balance of bullion banks versus hedge funds on the COMEX regarding the silver market, in that following Ted Butler's analysis, it appears that the bullion banks are going less short than they've ever been in recent history and longer than they've been. And also, it's remarkable to see some of the parallels stacking up to what amounted to a market failure, the nickel market failure back in the spring when we had you on to talk about the nickel market crisis. Could you give us a few words of perspective from your vantage point as a studied market viewer about where you see lessons learned from the nickel market crisis that happened this spring, as well as what we might see stacking up right now on the COMEX market? And then we're going to get into some more broader topics about preparedness in general.
Great. I think, and I've learned these lessons, and I'd like to maybe nuance them a little bit for others as I continue to reflect on them and build them into my own action or non-action. And I think what we learned from the metals market is that almost anything is possible. And if you can darn near destroy the London Bullion Market Association out of nowhere by massively over shorting something like nickel or any other metal over a period of a few days, anything is possible. And so I recognize the importance of what Andy is talking about, of the commitment of traders being more bullish than ever. And they have to make a decision on whether they go in again on the long side, which Ted has always mentioned. The first time they say no mas, it's all over. But are they ready to do that? Do they think they can make more money by sort of giving up the war than trying to do one or two more? And the thing is, when they get away with it for decades, it makes you think, well, I don't think they think they're weak. They think they're the most powerful ever. And that's when it's the most dangerous for everybody, including you and me. And I see that as the first of a series of spikes, any one of which that could either damage financial transactions and metals and agreements and confidence, which has already been destroyed on about any level you can think of, and the possibility of a death blow of contagion. And I've always been aware of the danger of that since studying Jim Rickards deeply, where he talks about something that starts out completely unrelated. And I do think, then again, that this can be an unrelated thing that won't be related to the short sellers giving up. It'll be something strange that we'll look back later and say, are you kidding me? This started out with something of like, Russia a few days ago declaring that they're putting palladium on the blockchain. Are you kidding? But it'll be like that, like Kreditanstalt, in the Great Depression. And so we as traders, I don't think we want to be fully all in on something until we know that the worst that can happen, like a massive crash, like March of 2020, won't happen. If we're 1/3 in, and I saw this today, a couple of people talking, I agree with them totally. If you don't have enough, we're into weakness, go into 1/3. Have another third of your money sitting there, a lot weaker, maybe another third, and save that 1/3 for catastrophe when everybody knows the world's going to end, except that it doesn't. And you get in there and you have some money. Now, I learned that in 2008 because I was buying every couple of days down, irrespective. I thought, well, it's going to stop at some point. And I ended up with no money and a bunch of losers. Now, I did do one thing. I didn't do it right away, but I was going to buy a stock. It was going to go to 35. It was 35 cents to 50, and it went to $14 a few months later. But I didn't realize that I could psychologically sell positions that I'd lost 60 or 80% on, and I shouldn't have let that happen, but I did. But finally, I sold some. I sold enough to make a 700% profit on my portfolio within about 6 months, and it saved me from trading into oblivion. And since then, I've been able to do that without hardly any emotion. When I've made the mistake first, and I've decided to stop making a mistake and losing, and turning some of what I gain into something that I think is going to turn around is very likely. I did a fair amount of that this morning, to be honest with you.
When you talked about getting blindsided, that what will affect the markets most dramatically may be something we're not even looking at, something we're not even considering, it reminded me right back to in my professional career in engineering, we had a future consultant who came from a very big name consulting firm to us to talk about future considerations, future markets, future trends, future ways to expand your business and imagining what the future competitive marketplace is going to look like. And one of the points he made is that if you do what most people in business do, it's equivalent to crossing the street by looking left, looking right, looking left, looking right, making sure that it's safe to cross. And you starting cross and get hit in the head by the airplane that you didn't see coming. So you've got to think multidimensionally. You've got to be expecting the unexpected. And I know from your experience in martial arts, that's something that I'm sure you were always taught, was expecting the unexpected and how to create adaptations to a situation in multiple dimensions that are perhaps completely unanticipated by your opponent. So for the ordinary person who's a household wage earner or a near retiree and trying to take care of their family, trying to reduce risk, this can just seem like shadow boxing against an impossibly complex and daunting foe. But you also bring a lifetime of perspective, of preparedness. And as you've talked about, getting a perspective from outside of that and taking a view from outside. So in the spirit of preparedness and making sure that we're positioned appropriately to protect our families as much as we can against what is unknown and to reduce risk against what's unknown. What are things that you're seeing as advisable in this environment?
I think realizing that you cannot factor in all of the unknowns. They're going to be out there whether you see them or not. And you also can't factor in the effect. And I remember March of 2020 when we had a horrific drop of a few short, days and weeks. Those things cut through years of support, and it looked like they were going to zero. Well, the day or two that turned around, they had a massive opening down day, and a few of them stayed down, but the better ones were up 50% an hour later. Somebody was in there doing something. Somebody smarter than you and I was buying something. And some of those, like Great Bear, I bought some. I think it was up 500% in a few months. So quality doesn't go off the board. It may seem like it, but we also have to recognize our own limitations, and we have to recognize. You talk about the martial arts, things coming out of a different direction. They can look different. They can be I don't know what you want to call them. They can wear a mask. They can seem small, and they can be gradiated explosives that blow up 20 minutes after they hit the ground. So be aware. Be afraid to do everything at once, and let the market talk to you and give you the rest of the answer. Whether it's 3 days up off the bottom, whatever works for you, and let the market talk to you. Quit trying to tell it what to do, and don't, if you buy more stock 50 cents lower, that's somehow going to help your position. It may, but it'll just be luck. Because I remember I used to do futures trading for a long time. It took me a long time not to sell soybeans one day before it turned around and made a true breakout from what I thought was going to happen.
You're reminding me of something else, a life example that just happened that played out it reinforced a lesson of preparedness. And that is something that I've brought up on our channel multiple times. And that is that everybody seems to most people don't even have a plan. Okay, you got to admit that. But people who watch our channel and people who listen to you and people who follow the Morgan Report, listen to Liberty and Finance, they are actively engaged, actively seeking information. They're trying to formulate an understanding of the world and the model in which we live that's more realistic than sort of the naive dream that we're being spun by the major mainstream media or the mainstream financial press and so on, and the government official sources that are telling us basically lies about everything that's going on. So people who are already in the distinct minority, just a few percent of the population that are seeking actively, it's still bewildering, but they're trying to put together a plan. This is what I plan to do to protect my family from this risk and that risk, and to take advantage of this opportunity and this opportunity that I expect will emerge at some point. And that's one of the challenges that I think that can really stymie any of our advanced planning if we don't take it into account. And that is that by the time we get the opportunity that we're waiting for and seeking for, we cannot and must not assume that all of the normal functioning and turnaround times and processes and responsiveness of all the dependent systems, whether it's companies that we expect to perform, whether it's the bank giving us our funds, whether it's the brokerage firm settling our trades and transferring the money to us, whether it's being able to reach and get through quickly to a broker to get metals purchased or shipped, or availability of bullion in the scale that we expect we need it at a time, that sort of thing. In all of those areas, we're assuming I've got my plan, and my plan assumes that the world will work the way it's working today, but I'm going to wait for the crisis to happen so that my plan will allow me this opportunity. But we're not factoring in too many cases, I believe, that at the time the crisis is occurring, we may be far from being the only people who are trying to exercise their plan at that point, in which case there could be this just crowded rush trying to call those brokers or transfer those funds or buy those metals, whether or not they exist, and that sort of thing. And secondly, all of those processes, all of those dependent functions that we're assuming are going to be there to support us in our plan may be backlogged or overloaded or whatever. So that's another thing that happened just yesterday to us. We were trying to come home from a small town downtown to our home, and it was farmers market day, very crowded. We saw, there's a freight train. It's going to block our path. I said, I know a side way I can get around. I can bypass this so that the train doesn't slow us down. So in doing so, I took my plan to bypass this obvious blockage of this obstruction, and I ran right smack into rush hour traffic on my secret bypass, and we sat there in bumper to bumper traffic for much longer, and by the time we got through that, the train was long gone. So my brilliant workaround, which would have worked at any other time of day, was no good in a rush when there was a crunch of traffic, and it completely undid my plan. So my plan was worthless in that regards. Long way of saying, what are your thoughts towards, and you've already given us some hints about that, planning so that we can be more resilient and not assuming that everything's going to be responsive as it was in a non-crisis time by the time it becomes obvious to everyone?
First of all, my thought when you pulled off was that you were looking where you want to go versus where you were, which is the thing to do. And secondly, that the most brilliant plan does not always work. And then if it doesn't, you got to accept that and don't beat yourself up. And the third thing is, most of the time it does. Now, that Montana thing, a week or two ago on a straight stretch, where a dust storm and an ice storm came up and visibility went to zero. 6 people died. Dozens of rigs were destroyed. Generally, get to the first exit. Get out of the way. Don't pull off to the side and have your truck hit 10 minutes later and explode in flames, by an 18-wheeler. Get to safety. Don't stand around looking. Don't get your iPhone out. That's usually get to safety. And so, we're talking about things that are usually right here, but nothing's 100%. But then you go to plan C. And I think a couple of things that really stand out to me in this whole discussion. First of all, I want to give you two examples if I have time. One, Peter Grosskopf made a comment a few years ago, and I've commented several times publicly, Sprott Asset Management, Sprott Group. And he said, the people that I know that keep the good money are the ones that buy when others are selling, and they realize that over time, 20% of their positions will yield 80% of the profit, and the other 80% will detract from that. That's the Pareto principle. And so the more I thought about that, I thought I can develop that to my own criteria. It may be different than other people, and it may be a little more risky. So I started looking at what I had, and I had like 30 positions. 6 of them were the big movers that I thought. 5 of them I've been right on so far. They were going to be my big haulers. And I started realizing not only do I want to stop collecting the other guys, but I don't want to get detracted. So I do deep research on a few things, and then I focus on those. And I have a few that may run, but they're small money, even tiny money, as David Morgan talks about on a tiny position, most of which don't work out. So to me, that's a driver. And so here, I'm going to give you something. I love Bob Moriarty. We've worked together for years. He and I have done things together, and I read everything he does. But he did a report a couple days ago about a company that does, I think it was the Royal Mint, that over a period of many years, they dumped about 7 or 8 million gold ounces into one of the big rivers there. They didn't fully refine it, I guess. And so this company has an idea to suck it out. And they haven't figured out how to do it yet, but they think they can do it. Now, that's kind of intriguing. A few years ago, I might go, oh, I'll put 1,000 or 2,000 into that. Maybe they'll do it. But you know what? Right now, all that does to me is say, David, I don't even know how they're going to do it. I don't care if they do it next week. But I'm detracting from my holdings of the big guys to put in something that right now I'll put money in, and definitely a small money. And so instead of doing that this morning, I went in and I bought several hundred shares of the highest confidence gold stock that I have ever traded in my life, because I believe it will turn out and be massive, and it will not detract one iota by buying this little stock that Bob could be right on. And if I'm wrong and it does a 10x, it doesn't faze me at all. And I've had other ideas that Bob mentioned that just, lit my fire, but this wasn't one. And it's also at a crucial time when we could have a big surprise turnaround in gold that tries to shoot up to 2,000. I might make a couple hundred an ounce, an equivalent in shares on that by sticking to my gun, so to speak. And also the other thing I'd like to tell people is please do not get caught up when you hear these ads. Everybody's trying to promote you can make 20,000% on the stock. You may, but you probably won't. But not only that, you don't need to mortgage the house going into what we're going in. This is so asymmetric that a modest amount of money could turn your life around with a couple of the right stocks. Don't feel you have to risk it, because you don't want to be blown out. The only worst thing than missing in something like this is to have too much and sell right on the cusp of the big win. And I think that silver and gold will be the later stages or the last of these spike, metals runs that Dave Forrest talks about, the spike bull markets, and that they will last quicker, shorter, and be more powerful than people imagine. So please don't forget to take a little bit of money off the table. Not when it starts, but when it's well underway and you go, nobody seems to want to sell. I think I'll sell today and sell 30%, and you won't regret it.
That's one of the things that Rick Rule told us actually several years ago was once you start congratulating yourself for how smart you were to get into natural resource stocks because it's becoming clear that that's a major trend and that people are acknowledging it, that sort of thing, is the time to start averaging out.
Yeah, and all trends have at their roots some basic flaw, and that includes EV, that we're gonna have a carbon neutral process, get the stuff going in the carbon. I saw a thing the other day. They estimate by 2040, I think, 50,000 tons of propeller blades are going to be buried in the ground, probably in Wyoming. And most of them aren't going to be recycled. How does that come out carbon neutral? I'm not sure on that.
The other thing you've talked about with us in the past is sort of taking the perspective from outside the rush and the details and that sort of thing. I think that might get back to some of your lifelong experience and some of your martial arts training as well. But you were speaking about that to me before we started recording. Is is basically stepping outside because there's so many things going on. Do you want to first maybe name sort of that litany of things that are going on that are so potentially disruptive right now? And then how do we step outside that sort of that buzz bubble to get the perspective we need to make calm decisions?
Well, first of all, at some point, you just stop. You do everything you can. You set your position up. Quit trying to fine tune it. Quit trying to go every day and do something about it. At some point, you wait and let the market tell you. And I know that sounds trite, but there's things going on now that I don't necessarily think are just rumors. We literally could have an attack on Iran by ex parties that the attempt to take them out for 5 years to be able to make a bomb. And it could be days or weeks. It may not happen, but it could happen. And I remember the build up to the taking out of the asymmetric reactor in Iraq, and how there were events happening untoward in Iran and Israel and France months before this happened. They didn't seem to be related, but they all were. And assassinations and poisonings and bombings and stuff. And, we can't figure out why or where on all these things, but something is leading up. And then in addition with the Belt and Road Beat and the Northwest Passage, there's been incisive articles on how this is building out with Russia. And there's so much, disinformation, much of it on purpose, because Sun Tzu in The Art of War said, appear to be strong when you're weak and weak when you're strong, and all that. So I'm not saying it's immoral. That's the way war is done. And you're going to be on the financial battlefield. Nobody cares about you, about triage. It's about you and yourself, surviving and thriving. And you can do it. It seems overwhelming, but at some point, just stop. You don't see alligators moving around, trying to eat wildebeest all the time. They sit there with their eyes out of the water, and they glide up to the guy drinking and grab him by the throat and explode. And that's what people don't understand about living in Florida, for crying out loud. I see these people putting a handful of meat above this alligator sitting under a little bridge. That thing can jump 5 feet in the air. And there was a professor of the University of Washington a few years ago who was in Africa someplace. He was the lead man in the boat doing research. Wonderful man from what I understand. And out of the water came a large alligator, just like one of these flying fish, grabbed him, took him over the other side, and never saw him again. Figure that, or these hippopotami that can run faster than a doggone lion, under the water, grabbing people. So don't underestimate an animal. Don't realize that to a lot of critters out there, you're food, including to Mr. Market.
So how do you step outside? You mentioned stopping sort of this obsessive tweaking of your portfolio. That's one thing. But as a preparedness-minded individual who's trying to take good care of your family, beyond your portfolio, I think your perspective can be carried over into general and broader preparedness topics about mindset and about preparedness for lots of physical things. Because I know even before we started speaking, you talked about potential for food shortages, that sort of thing. Can you give us your view of more of that broader perspective of preparedness?
Several years ago, when I realized that we're having a shortage of fertilizer, I found a long-term place that stores, that builds a new paradigm shift in Saskatchewan, that doesn't draw it out of the ground. It does ISR. It doesn't even need a building or an environmental permit, and they pre-sell it 50,000 tons a year ahead for 10 years before they build the module, instead of a $3 billion trade dollars, a traditional potash builder that leaves a 250-foot high tailing salt spawn when they're done, because the stuff stays in the ground. And so I put modest amount in that. I held it for 5 years. I did a 3X. I'm back in it a little bit now, but that's just a little side piece that doesn't detract from the rest of what I'm doing. And I looked at 25-year food. I did a lot of research to get the best quality I could afford. I tried it out. I watched REI, which is a local place we have for working out and stuff. They've improved their food from 2 or 3 years to 7 or 8. So I have a layered ability to put in these tranches and try it out and make sure I can eat it. And I don't end up with 500 pounds of macaroni and mashed potatoes. So try not to get caught up in the hype and things like that. And and like you say, coming back and doing, making sure I have long-term battery storages, and when it doesn't work out too well, get a better one. The old saying that one is none and two is one is pretty good when you have something that works, maybe double up, that type of thing. And of course, psychological and all these things to keep my family a little safer and stay in shape. I read one time I read a lot of these SEAL podcasts and stuff, and this one guy had really been and done a lot. And one time he was walking around the corner in Kabul, and there was a lot going on. It got real quiet, and he started to stick his head around the corner, and all of a sudden he just stopped and pulled his neck back just as an RPG went by. It would have decapitated him. There was no indication before he did that anything was going on, but something, I don't know, you tell me, something inchoate told him, or he listened to something going on and said, don't do that.
Following your gut, following your intuition, I think that's another a lesson that ties in well with everything you've just said, is that the potential risks are so many and so varied and so unpredictable, so unknowable, that we can't just go on facts that have been, presented to us, but we also have to kind of trust an inner sense, an inner guide, whether it's intuition, whether it's your gut, to be aware that you need to make deliberate and prudent decisions and do it ahead of time, and don't wait for the crowd or the news or any outer confirmation to basically validate your gut instinct before you take action. So very good food for thought. David, we want to make sure that people can find your work if they want to follow your thinking and your writings that you do on many related topics. Where can they get connected?
I write articles several times a year for the Prospector News. I've been a contributor to the Morgan Report for a long time, and for Money Metals. And I do interviews like this with you, so they can find me. I work with the Load Project, LODE.ONE as an ambassador, and we're making great strides in that project, so they can look into that, digitalizing gold and silver on the blockchain. And I think we are moving into a blockchain age, regardless of what happens to Bitcoin, Ethereum, and the altcoins. I do think the two I mentioned will not go away, but they're certainly struggling now. But just keep appraised and keep learning, and I think you'll do just fine.
Also, folks, if you don't want to miss any of our interviews, make sure you go to libertyandfinance.com. Just submit your name, email address, and we'll get you on our mailing list. We send out your emails into your inbox every single day with our upcoming interview for that night, 9 p.m. Eastern, 6 p.m. Pacific, every single night of the week. And David, thank you as always on behalf of all of our viewers for joining us here on Liberty and Finance.
Thank you very much, and give my very best to the entire team at Miles Franklin. I respect them all deeply.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.